This conference will now be recorded.
Good evening, ladies and gentlemen. Real Estate Trading Frank, approximately 8:49 p.m. Eastern Standard Time, September 25th, 2019. Full disclosure, purely for financial education, not for any solicitation or advice. This strategic webinar session will be recorded, uploaded to the Google YouTube channel, Real Estate Trading Google YouTube channel, for viewing by all members and free trial subscribers and anyone out there with the internet connection who would like to find out something real, not fake, about the US stock markets and hopefully benefit from all the valuable information that and technical forecasts that are provided on these strategic webinars. On that note, we shall begin. Good evening. So, before I go any further, a couple of important points here, which obviously we all have to know. Behind you, you're seeing a live depiction of the E-mini futures daily chart, what we call the big picture. You can see here what's happening. You can see here what happened today with the markets up approximately 163 points. At one point, they were above 200 points. This is what happened yesterday. While this is extremely important, by the way, guys, ladies and gentlemen, while I was at my dental appointment, I left for my dental appointment around 11 a.m., came back around 2:30 or 3 p.m., and next thing you know, the market had dropped 200 points, impeachment garbage, all that stuff. Ukrainian, transcripts on President Trump's call, all that stuff. And the next thing you know, this is what happened today. That's just the market. Did I feel great? Did I came back? Or I got off my anesthesia on my major dental procedure? No. But hey, that's life, right? So I started buying stuff when I got back around 3 p.m. and everything that I bought, including the indices, the SPYs, and all that stuff, paid very handsomely today on this green candle. I'm going to keep this webinar really short. So the first thing I'm going to show you, which basically cuts out all the garbage noise and what we think, what's going to happen during the day and blah, 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 is the NIMO. Let's do this, okay? This is a public chart. That's why you have the ad-supported channel. So this is the NIMO, which is the New York Stock Exchange McClellan Oscillator. Let me walk you guys through it. This has been a very reliable predictive indicator, regardless of the intraday noise that we have to suffer thanks to the algorithmic high-frequency trading volatility programs, which are primarily trend following and manipulated in many cases. The market is a manipulated beast. By now, if you've been with my service, you understand that. What we try to do is cut through the manipulation, the noise, which is volatility, and set up trades which can deliver some very smart and handsome and profitable results for us. Overall, we have been very successful in doing that. That's the reason why we're still doing what we're doing. That's the reason why I'm still a professional trader, or else I'm smart enough to choose another profession and do it. I could be a financial advisor. Great. That is probably one of the stupidest jobs in the world. Anyway, because you need a lot of stupid people to understand that you would not understand that you're stupid, and you make money off the commissions. I was on Wall Street for a lot of years. I was a glorified high-end financial advisor for institutional clients and high net worth clients, people with lots of money, seven-figure type of trading accounts, investment accounts. And I'll tell you, most people in that business have no idea what the heck's happening with the market. So take control of your own destiny. So the NIMO, which is the New York Stock Exchange McClellan Oscillator, is telling us something that the internal noise in the markets every day is not going to tell us. This turned up. This has a minor crossover. Every time it has a minor crossover, after we fall into the red, and we went as low as minus 15.78 after going up to the highest levels, which is basically a sell signal. And I'd mentioned that a couple of times in my previous broadcasts. You want to buy with hands down, eyes closed when it's here, when it's minus 80, minus 50, and around minus 16, you want to buy selectively, like I said many times today. You have to be selective. You have to get in there. But what's the most important is the full stochastics on the New York Stock Exchange McClellan Oscillator is turning. Does that mean we're going to hit new highs completely? No, I have no idea. There's a lot of factors involved in it. We have the impeachment inquiry going on. Remember, this is not a formal impeachment stuff. And even if President Trump, my boy Donald from New York, gets impeached because he likes to talk too much, especially with the Ukrainians, the Russians, please, why don't you talk over a burner phone so no one can hear you? Seriously, think about it. It's still net, the markets are going to rally after it drops. That's just the way it works. So on that note, I actually put out a post out there on my Twitter feed that just came out on CNBC after what happened after President Clinton got impeached because he was having a lot of fun with Monica Lewinsky. Okay, so that's the way it works. Markets don't give a crap, just so you know, whether it's a Democrat or a Republican. I know many of you don't want to hear that, but it's true. Because if you look at the statistics on the Democratic presidents, regardless of how dangerous they were going to be, and I'm not a Democrat, you guys know that, the markets rallied because U.S. business rules. And whoever is in power, they cut deals with U.S. corporate business. Even under Obama, the markets rallied like nobody's business. And under President Trump, who is extremely business friendly, I'm very happy about that, the markets have rallied. End of story. Read the article. Those are actual facts. So this is good. This is very good. And what we'd like to see is the MACD on the McClellan Oscillator start to turn. Here's the bottom line. The markets are not going to hell in a handbasket, guys. We have lots of winners. We have a few losers. That's just the nature of the business. When you can get GameStop, and you know I've been playing a lot of lottos because I'd like to keep my money on the small side in these extremely volatile markets. I go to the dentist, the market's up nicely. I come out of the dentist 2 hours later yesterday, and the markets are down 200 points. So is it me, under gum sedation, getting my deep gum cleaning, or is it the markets? So you want to stick to, and I'm going to highlight this in a big way because this has been a monster winner for many of us who have taken the plunge on buying things at, forget the decimals, at 4 to 6 cents, which have zoomed up to 25 cents. That's what it did today. So that's like a $4 option going to $6, going to $25. It's the same thing, right? So if I told you all, and think about this for a minute, because this is what I do all day long for all of you. And many of you are finally changing because many of you are attacking the demons in your head and starting to talk to yourself. Because as a retail trader, ladies and gentlemen, and we have 2 ladies here in attendance, if you don't talk to your mind about what you're doing in the world of trading or in life, forget the life part. I'm not your life coach. I'm your trading coach. If you don't talk to your mind about the fears that you deal with, which I deal with all day long, that's why I say I turn fear into positive stress, which turns into profits. I don't like a lot of the things that happen in the market. I don't like the fact that I went into the dentist chair yesterday afternoon for 2-3 hours. And I came back and the market was down 200 points. No, but we don't have to like everything about the market. It's what we do with the market. How we take advantage of it is what matters. And the simplest way you can do it, you don't want to lump all your money, whether it's small money or big money, into one or two positions. Say, okay, this is definitely going to go higher. Yeah, if you have a longer time frame, certain selective trade alerts that I put out there certainly will go higher. I've proven that over and over again. But over the short term, you're going to take a bloodbath. So buying a 4 to 6 cent option going to 25 cents, C's for cents, it's the same thing as buying a $4 to $6 option that goes to $25, which is huge. What kind of percentages are we looking at? We're looking at, on average, 500% plus. And that's exactly what happened with GameStop, and the stock is still looking good. So I'm not going to bother asking any of you, because my job is not to question you guys, okay, whether or not you did it. But if you keep on missing out these type of trades, then there's still room to go, as long as you have time in your hands. So October 18th and November calls are fantastic. You have to give time. So if you didn't do it, you still have a chance to do it. So please talk to yourself before you go to bed. I'm 50 plus years old. By now people should know that because I've said it 100 times. I still have more energy than a 22-year-old kid. Why? Because I do trading? No. Trading is simply a manifestation of your own personality. If you attack everything that happens in your life and you say, I'm going to solve it, doesn't matter how it happens, I'm going to solve it, then you're going to be a very successful trader. It's the same thing in trading. So just do it. 500%, 400% if you got in a little bit later or you didn't cost average. You don't want to take that type of profits? I have nothing to say. Let's get back to the charts. And that's GameStop, still in play in a big way. All the charts and everything are there on my Twitter feed, the long-term charts, the short-term charts. Please review them and do what the heck you want to do with it. You can put a small amount of money in that goes big. Because what are we talking about here? $4, 4 cents. So that's about $400. So if you put $400, you would have $2,500 here. How many days did it take? Maybe a week? Do I make these things up? No, it's right there. $2,500. Let's say you put $4,000. Depending on your account, you would be up to $25,000. Now you're probably not going to be selling right at the top. So let's say you caught the fat in the middle, like So you got it at 4,000, or or you didn't get it at 4,000. Let's say you got it at 10 cents. Okay. So instead of making $21,000 profit in a matter of 10 days, let's say you made $7,000 profit, or even $700 profit. Go figure. See, I don't have a system in place yet which shows the dollar amounts that go in and go out on these type of options. I'll do it one day, very soon. But everything's there on the Twitter feed. The reason I don't do it, because I don't know how much money other people are trading with. I don't want to know what people are trading with. That's the reason why we show percentage returns, 500%, 400%. That's what we like to talk about. Percentage. How much money you put in there, whether it's 400 or $40, which is really, if you put in $40, then don't be a trader. But let's say $400, that goes to, $2,500. Then we are looking at returns on your money. I could just stop the session right now, but that says it all. That one trade could elevate you on the next level so that you can take part of that profits, part of that money, and move on to other areas of the business, of other alerts. So let's get back into the boring, this is dry stuff, right? Dry technicals. Technicals to me are very sexy, very exciting, but to most people, they're very boring and stuff. But why is it so sexy and exciting to me? From a trading standpoint, because they make me money. That's all. This is great. This is good. Are we going to get up to the overbought 67 upper Bollinger level? Well, in that case, the market is going to make new highs and go higher. I have no idea. All I know that this short term is moving higher. And that's a great thing. And this is beyond all the heavy duty talk about impeachment. It's actually an inquiry. And whether or not President Donald Trump gets impeached or not, whether there's really hard evidence to impeach him, I'm not in the business of figuring that out. All I know that even if he gets impeached, what happens? There's a lot of shouting and screaming going on, lots of Twitter posts, but Vice President Pence is going to come to power. Markets will drop initially, maybe 3-4%, which is going to feel like the end of the world. And then they're going to rally. They're going to rally because the policies are not going to change. So wake up and smell the coffee. All right? That's the way American democracy works. Same thing happened during President Clinton. Read the article I just put out there because most of you have no frigging idea how American politics works or government works. That's it. Okay. So this is very, very good. This I like a lot. And this is telling us that the markets are A-okay for now. Next one. So the next one we're going to look at is which is quite similar. It's there we go. And these are absolutely on the money charts. I don't care whether you believe them or not, but this has made all of us big money as long as we have the discipline of holding positions. We have the discipline of not panicking like a monkey in a hot tin roof that we all do at certain times. All do. And that's the reason why I had put out this tweet earlier on tonight. I just put a couple of my thoughts on my iPhone notes, and I said webinar notes. And what does the first one say? I'm scared of selling too early. This should have said, I am scared because I sell too early. And most of you sell too early 99% of the time, including House, K-Bot, Mike, Sue, and Frank. Hi, House. So I just put down some mental thoughts here. How many times have you guys sold early? And don't lie. Because you have sold way too early on those type of NIMO turns that I'm talking about, and the SPX 533 predictive analytics chart, when the turn is about to happen, it goes up a little bit, crosses over, and it moves up here, vacillates a little bit, and you sell too early. And then you see it's cross over big time, like it's always done, always done, always done, always done, always done. Every time this full stochastic crosses over. And this goes from being negative to hugely positive. This is not even negative that much. So even if it goes up to 5 or 10 on the MACD histograms, we're going to be up a lot. So you sell too early. Then you sit there and say, oh man, why did I do that? You hear that little voice in your head? Do you ever get pissed at that voice? If you don't, if you think you're doing great, then hey, God bless you. Because you're not doing great. I'm not doing great. I'm doing better than most of you, but I'm not doing great. And if you think you guys are doing great because you took out a 50% gain on an option while it went up 500%, well, in that case, you need to get mental calibration. And why do I say this stuff? Because I don't like my members? I know most of you guys. They're good people. Weak people when it comes to trading, very weak mentally, but good people. Good people don't become great traders. Strong people become great traders in time. And what I try to do with these coaching sessions is try to facilitate and expedite that time period between you being a somewhat okay moneymaker on the trading side to becoming a serious moneymaker. Talk to yourself. So the first one I wrote, I'm too scared of selling. It is sold too early and not buying absolute technical lows. What are absolute technical lows? Those are the points when the MACD, all those indicators on the slow stochastics are right at the bottom, and there is a large element of risk. Are they going to turn up? I can see points of it, and most of you don't step in there. I do. Whether the markets are down 400 points, 600 points, 800 points, or 200 points doesn't matter. It's what the technicals, whether are they truly oversold. Now, whether they're going to curl up or not, there is an element of risk. That's trading, and that's options trading. You have to have that element of risk in it, because by the time it's already showing, it's already up a lot. Whether it be Google, I gave to you guys at 90 cents, a dollar, and it hit like $2.20. Whether it's Shopify that we bought today at like $2 or less, and it hit $4.60. That's almost 150% higher. There's an element of risk. That's why we follow charts. The chart's not going to tell you everything, but it's going to give an indication what is happening. If you guys don't agree with me, that's your problem, not mine. And I love you all. All right? Really, I like you guys. What's the next point? I tend to focus on intraday red candles and need to hold long-term swing position inside. What does that mean? Simple English. I'm following the 15-minute chart, the 1-hour chart, these extreme volatility, a tweet from President Trump, some garbage comment out of the Chinese Commerce Ministry, Fed governor says something stupid. All these are things we have to deal with. An analyst just downgrades Apple, saying they're never going to make money. In the meantime, right after that, Apple went up $6 and told you guys to buy it. Anyone here actually bought Apple on that pullback when I told people to buy it? And be adults here, okay? And say, hey, I didn't, or I did. House? Okay, no response. I love that. K-Bot? Okay, K-Bot actually responded. No. Okay, I like honest answers. Mike? Sue?
Yes.
You did with the day that Apple fell on that bullshit analyst downgrade. Did you buy a little bit at that time? It was what, a little less than a week ago?
Well, I'm doing very short term.
I'm sorry, what?
I said I'm kind of doing very short term this
Okay,
day.
fine. Okay, that's fine. At least you gave me a good answer. Yeah. So the day I did a webinar right after that, when the Apple downgrade, explained that he actually downgraded Apple, this analyst from Goldman, based on an accounting procedure, if you remember. Okay, so short term or not, you could make a lot of money on Apple. And because it was a completely BS downgrade. So that's what I'm saying. Sorry on the BART. What's BART, House? I have no idea what BART is. All right, let's move on. I don't have time for BART, House. Try to explain a little bit further while you type in. All right, so we all have to look at the candle structure and stuff, but when we actually see it, and I'm not talking about just Apple, but when we start to see things like GameStop, then we start to see things like which we have made really good money on. It was down a little bit today. A boring stock like AT&T. When we see things on Cloudera, and these are real swing trades, okay? And today I introduced a massive swing trade called MPC, which is up a lot. Marathon Petroleum, one of our old trading stocks from 2 years ago. So when we start to see these things, we need to keep an eye on these intraday red candles back and forth, but we have to somehow maintain our swing positions with size. In between, take some profits. So I don't care whether you're doing like very short-term trading, which is fine and good because everyone has their own style, but you cannot let these monsters get away from you because they are down 20 cents on a certain day. just trying to help. I've gone through all this stuff. If you watch your P&L, which I do too, by the way, with like a hawk, and is dipped a little bit because of the impeachment stuff or President Trump tweeting out some like insane comment, which he does sometimes. He was actually very diplomatic, very presidential on the UN speech after the market closed. I loved it. I loved it. So, but he didn't make any rash comments. And House, what is BART? Just type it in because I'm curious. So, anyone know what BART is? Aside from The Simpsons? All right. So the thing is, gotta stick with these things. All your trading career, you have left huge, humongous trades, including one of my all-time biggest winners, Chipotle, where I kept on buying on stages, selling, kept on buying stages, got hit here and there, still kept on going. How many times are all of you gonna keep on making the same mistake? On stocks that are coming off massive, massive lows, not like stocks that are all the way here and making new highs. Those are more dangerous because you could suddenly get a analyst downgrade and a pullback. But stocks coming off from massive lows with actual fundamentals and technicals, which are the charts, indicating that it has a higher probability of going higher, not to the highs, but somewhere to the mid highs, which is a lot of money. The day you can do one of those trades, ladies and gentlemen, is the day you're going to feel what it feels like to be a killer trader. That's the day you'll get confidence that you can carry on for years or months. So if any of you have come to that stage because of one of my alerts, the big time swing alerts, quite a few of them that I've given over the past couple of years, then reach out to me or just tell yourself before you go to bed, that's where I want to be. Aside from that, you're always going to be a piker. What's a piker? Little trades, boop, going down, little trades. Oh, losses, oh my God. Yeah, I'm not making fun of anybody. I've gone through all that. That's what I'm telling you. I'm trying to wake you all up. Make yourself money to make yourself, your confidence go through the roof, to make your family happy, and to bring yourself up to the stage where you're confident enough where the market volatility upsets you but does not destroy you. Telling you words of wisdom. What's the third point? I need to robotically follow the swing charts and not lose sight of the price because of intraday volatility fluctuation. That is exactly what I talked about right now. So as the stock market keeps on going like this, little pullback, this and that, and it keeps on going higher and probably will make a new high very soon, keep an eye on the big picture. Buy time on the options if you do not want to look at day trades, which is totally fine. I would love to just buy, which I have in one of my portfolios, long-term calls and not bother with putting out trade alerts every 15 minutes, an hour. Because what is everybody so freaking scared of? Which is fine, because fear means cheaper prices. That means we can buy things on the lower end. Look at these great stocks. Netflix, Apple's still moving on. Facebook's still moving on. Amazon down like 150 points for what? Now, some of you can be hardcore bears and say, oh no, everything's falling apart. No, everything's not falling apart. There is only one thing that dictates the market. Can somebody tell me what is the most fundamental thing that dictates the market? I've talked about it before. What is one of the most important things that dictates the market? One of the most important things. K-bot. I've talked about it hundreds of times. hopefully tonight you guys will remember so that you don't freak out whether the market is going to hell in a handbasket. What is it? And please, I don't have all night, so just say yes or no. I don't know. Mike, Sue, respond, please. What is one of the most important things that dictates the market? Valuations of the market and stock prices. I'm getting the silent treatment. Great. Thank you very much for the silent treatment. Interest rates. Federal Reserve. One of the most important things, as long as the Federal Reserve is open to softer rates or rate cuts or what we call a dovish policy, the markets are going to be fine. The other stuff matters. Earnings, growth, trade wars, very important. But one of the most critical components, no, volume. What are you talking about, volume? Where does volume come from, K-Bot? But thanks for the answer anyway. I'm talking about the actual invisible hand that controls the market. Federal Reserve, the US interest rates. Interest rates shoot up too much, markets fall. Okay? Valuations, the PE, price to earnings, and everything comes down. You get these big, big pullbacks. Trade wars, not good. That's why trade wars are getting minimized and they're going to get settled. There are many indications of that. One of the most important things is the Federal Reserve Bank of America. I've talked about this many, many times. Okay, this is not a test whether you pass your SAT or not, or whether anyone gets into college. I'm just telling you the facts. So that's it. As long as the Fed is friendly to the US markets, and they're saying they're going to cut rates as necessary. He said that a zillion times. Jerome Powell, the current Fed chairman, the markets are going to be okay. So no more charts. I think I've taught you guys enough. Let's look at a couple of stocks. And please throw in any stocks you want to look at. Here's GameStop. It's quite simple. Either it goes to 563 or it goes to 754. Already we have a 400+% gain on this since I started recommending it. Okay, we have, yes, we do. More than that. 4 cents to 25 cents or 10 cents to 25 cents. That's already 150%. All right, but in general, I recommend the stock around here, and this is where it is. The gap, in my opinion, will get filled for reasons that, please listen to my previous video and you'll know exactly the reasons. This is the technical picture, still looks pretty damn good on all fronts. And if you think you can afford to buy a option at this point, it's 16 cents, 16 to 18 cents, the October 18/6 calls, I have nothing to say. That means the demons are so much into your head, they're like a cancer. They're eating you alive. Come on, ladies and gentlemen, wake up. Now you have to have some size. 16-cent call is the same thing as buying a $16 call, right? If you change the decimal points around. So if a $16 call goes to 40, that means a $16 call goes to 40. That means a 16-cent call goes to 40 cents, which can very easily happen. So I like this a lot. What's the next one? This one, which is the boring AT&T. And I'm showing you longer term charts. Nothing wrong with the technicals, everything doing fine. And remember, this is a really boring stock. What is this pattern? Somebody should answer me this. What is this pattern?
A flag?
What flag?
A flag.
It's not just a flag, it's a bull flag, Sue.
Yes.
Yeah, exactly. But you gave the right answer. It's a flag. But remember, this is a flag too. And that's a bear flag. So when you, it's like giving a mathematical answer to a professor in college, and you just say that one thing, and he's going to say, well, what part? A flag can mean a bear flag or a bull flag. But at least you got one part right, even though you won't pass the test. It is a bull flag. Yes. So if it's a bull flag, why aren't you buying the crap out of it? On top of that, Elliott Management, Paul Singer's in it, who is one of the most powerful guys in the world and one of the smartest guys in the world when it comes to the world of investing. And he's saying the stock should be valued at 60. It's like giving away, and we still made money on this, by the way. I'm still making money. So the point is, when you're given these things, literally, I mean, now the bull flag really shows up. And thank you for your answer. I appreciate that, Sue. So this bull flag is going to break out and it's going to go to around 40. I asked you guys to buy it around 36, 37, 35. And the calls went berserk. The question is, when somebody gives something that free, and K-Bot gave the other part of the answer, bull. I appreciate it. Is it bull crap or bull flag? I'm just kidding. So so the point is, when I'm giving you these type of trades, which are literally hands-on. Now, don't expect them to work like every day. Then what the heck are you doing? That's the story of the stock market. It's not your fault. The story of the stock market is great, great, great opportunities come by. And just like life, people don't take it. You're all going to be chasing, or other people are going to be chasing, as the stock is breaking out to the eventual destination, which is 44, which might take 3 months. But that's $6 from here on the cheap calls. That's probably 600% on your money. And this is not the first time that I've given this type of trades. But you guys don't take it. Well, some of you don't take it. So what the heck is wrong? It's that little voice in your head that you need to kill before you go to bed. Pray to God to kill the demons in your head. The demons in your head is Satan. Okay? Satan wants you to remain weak as a trader. And that's exactly what happens. It's a bull flag. It's going higher. Period. Yes, in between it can pull back and this and that. But as long as the pattern doesn't change, you want to go higher. You buy those cheap, cheap, cheap calls, 30 cents, 40 cents, 10 cents, 15 cents, all around this level. And you buy size. When people working hard, i.e. me, are giving this type of unbelievable trades to you all, it's your obligation to make some money. Nothing is wrong on the internal health of, look at this. Look at this. A surge in the histogram, a surge in volume. What are you waiting for? I know what you're waiting for. You're waiting to lose money because you're not buying at the right time. Look at this. Now somebody might say, hey, where were you at 30? I'll say, yes, I was wrong. I wasn't watching AT&T at 30. But why not watch AT&T and get into it at 35 while it's still moving higher? This is a large cup. And at the 40 round number, there'll be some big sellers just because it's a psychological number. Let's look at a new alert that I put out today. Did anyone grab a piece? Because it's up very nicely. Marathon Petroleum. I repeatedly showed it. Did anyone buy it? Did you, Sue? Because you're a short-term trader. That was a short-term trade. Well, short-term trade, at least for today. It was up a lot. Did you? Don't be scared. I'm not going to bite you.
Are you asking me?
I'm asking you.
Oh, I didn't buy this one.
Okay.
Today I bought Amazon and Netflix.
Okay. Well, I don't understand why you didn't buy MPC. I'm constantly showing the chart that, what that shows is, and I'm just going to highlight a point, don't take it the wrong way. That shows you're not understanding my charts at all. I'm showing you a massive W formation repeatedly showing out, range breakout with a hammer reversal on the daily, and you didn't buy it. So I'm not going to even mention you, but anyone who didn't, how stupid are you all? I asked you to buy the 62.5 calls somewhere around 90 cents to $1. It closed at it went to $1.40. That's 40% intraday. You did say earlier on, Sue, right? I'm not picking on you. I'm just telling you straight out. And it'll help you because you're going to ask yourself why. You said you were a short-term trader. So why not make 40% of the short term when I'm repeatedly saying buy the stock, Paul Singer, Elliott Management is in it. I'm showing you the chart on a massive range breakout. Why? I'll give you the reason why. You don't need to tell me. Because you don't know the stock. So you're thinking, I don't know Marathon Petroleum. Why should I buy it? Am I right or wrong? Tell me if I'm right or wrong.
Yeah, you're right.
Right. So this is a good point also that I'm going to explain. And hopefully it's going to help you make more money and other people make more money. You don't care whether you know the stock or not. As a technical, tactical trader, and this has nothing to do with Sue, at least she has the honesty to answer the question, and I appreciate that, is it doesn't matter what the heck the stock is. Look at the frigging chart. This is probably one, I wasn't here at Marathon Petroleum at 47, but when I saw that on briefing.com, that Elliott Singer, Elliott Management, and boy, these guys, my dream was to work at that particular hedge fund, but they didn't take me. This was years ago. Okay? Because I wasn't smart enough, because I wasn't that much of an analyst, hardcore, even though I started my career as an analyst. This is a massive W on the daily with a range breakout, hammer reversal going to 65. You still have time to buy it. Remember, I don't beg people to buy things. That's your problem whether you buy it or not, whether you want to make 40% in a day on your calls. There are way too many stocks moving. Look at the reversal in the market today on the overall charts that I showed. Amazon had a humongous reversal. But the best one that moved the biggest was Google, was up 2.19%, the stock. Amazon still looks pretty good, was up 1.53%. I'm talking the overall movement in the stock. Apple was up 1.5%, 1.47%. Google was the biggest. You know what was the biggest mover today, which I recommended? And it turned around, went down a little bit, then went nuts. The biggest percentage mover on the tech stocks was what? Can anyone guess? Is one that fell the most over the past month. Netflix. Netflix was up 4%. The stock from yesterday's close to today, not from the bottom higher. Google was the next. You have to watch those things. As a trader, you have to see the percentage moves. Another one which was a huge winner for us was Shopify. It was up 7% just on the stock. And on the calls, we're up more than 100%. Shopify. Gotta focus on the charts. All right, ladies and gentlemen, you gotta focus on the chart. So, okay, Marathon Petroleum. Lots of fundamental reason I love. Look at the volume. These things you have to, guys, watch like real fast. This is not rocket science. Your 7-year-old son or daughter can probably be a better trader than most of us. Because simple stuff. Look at the MACD, just surging. Look at the volume. Look at the volume. Oh my Lord, 17 million shares. Please, somebody mute their microphone. Huge volume, probably the largest volume detected in a long time. The last time the stock sold off was 9/28, 2018. And look what happened today. You think this volume just went in there for fun? Think about it for a minute. It went in there for fun. Like, okay, we're going to buy almost 20 million shares because it's funny. No, it went in for a reason, because the stock is going higher. Paul Singer wants to break up the company in 3 pieces. Did anyone read my tweet? And you have to read all my tweets. That the management of Marathon Petroleum actually welcomed Elliott Management's activist letter to the company saying this is what you need to do in order for the stock to go higher. And on top of that, not that I give a hoot about, Kramer said the stock should be trading somewhere around 70, 75. Was it Kramer or somebody else who said that? I don't care what he says. I'm just telling you. So when you look at a chart like that, don't just sit around twiddling your thumb saying, oh, I'm just going to buy Amazon, you know. I'm saying there's nothing wrong in buying Amazon. But when you see these great opportunities on a stock that was trading at $90, so yes, we weren't here, but we're here. Don't just sit there. Please, don't sit there. Let's take a look at Shop. Now, Shopify is an extremely volatile stock. It's a very highly valued stock, and it's one big monster. It's a monster. It's the next Amazon. The guys are just unbelievable. And this move today, breaking out of the falling wedge. 1 second. Thank you for bringing that up. I know I was going to talk about it too. Thanks, K-Bot. You see, all you need in your life, in your initial life as a trader, is not to buy 30 different positions and trade them every 15 minutes. No. What you need in your life is to pick a stock that's fallen 100 points, sit with it for 2 months, and let it just pay you the bills. Won't do it every day, but that's just the way it is. Buy some calls, I don't care, way out of the money. But you gotta follow the charts. Shopify is a company that ain't going out of business, ladies and gentlemen. Most of you don't even know what Shopify does. Does anyone know what Shopify does? What do they do? I'll tell you what they do, but anyone knows what they do? Okay, I'm getting the silent treatment. Great. So, Shopify creates online commerce websites and shops for online commerce. Think about it. Anybody could open a, that's why it's called Shopify. Stock got smashed from 410 to 283. Whoopee! Every analyst is basically like, I hate the company. Who cares? We're looking to be traders. So Shopify, from the time that I mentioned it, was up almost $15. And this is one bullish candle. What is this pattern? I know these are channels. It hit the bottom end of the channel perfectly at 286. What is this pattern?
Falling wedge.
Perfect. You get an A+. It's a falling wedge. What happens with falling wedges? What happens with falling wedges?
They break out.
Thank you. They break out to make you rich if you get in there. So it is just breaking out. This stock, I don't care what happens on a daily, like intraday 2-hour basis, is going to go to what's this level here? Because all the lines are drawn. 325, that's 12 points from here. That's chump change. The stock is going to hit the 50-day moving average at 350. It's going to at least kiss the 50-day moving average, which also happens to be the upper end of this downtrend channel. Keep in mind, it is still a downtrend channel. God helps us, if it breaks above that, it's going to take out 412 like your head's going to spin. But this was a very, very positive development. Now, as an options trader, you might say, hey, let's see if it pulls back a little bit, 2-3 points. That's completely fine. But when you take into account this huge volume after a massive drop on the weekly, okay? On the weekly, the stock dropped from $316 to $288. Boom! So if you're just looking at the stock price, you have no frigging idea what is happening on the technical front, because without the technical picture, you have no freaking idea where the stock's going to go. It almost kissed 100, and this is what hedge funds watch a lot. This is when one year worked for a small hedge fund, you know, there's like, we always watch the 150 day. Okay, great. Okay. but it is important. It's beyond it's they watch this more carefully than the 200-day moving average, which all of us do. But this is a falling wedge. First level of contact is the mid channel at 327. 50-day moving average is 350. That's 37 points from here. One way or the other, it's going to get there. Now, unless we have some other calamity in the market, that is a different story. But technically speaking, the stock wants to gravitate toward the 50-day moving average. This volume of almost 6 million shares is humongous. This massive volume of 6 million shares that was sold last on the daily yesterday is known as what? What do you get? You get a blood red sell candle and huge red volume. What is that term called? You guys have been trading for a long time. You don't know what that term is called? K-Bot said it. A++. Capitulation. That's when we give up. Like, oh my God, it's over. It's like you're getting impeached. That's it. You're impeached. Impeachment. It's like subject, like a lovely term. Like, hi, what are you doing, honey? Well, I'm getting impeached today. Okay, that's great. Shouldn't it be a little tougher term? Like, hey, I'm getting decimated, right? So, impeach. What a stupid term. Clinton got impeached. What happened? The markets went up like a gazillion points. Trump's going to get impeached. I don't think he will. It's going to be up a gazillion points. You know why Trump doesn't get impeached or whatever? And I'm
Hey,
like,
buddy.
I know everything about it. Is
What's up?
because the Democrats are a bunch of wusses. They have nothing. Trump has done more silly things and stupid things and some crooked things like nobody could ever think of, right? I love his business policies and everything. I don't like a bunch of the other stuff that he does. But the point is that, and I'm a New Yorker, I know everything. But you know why they can't take him down? Because the Dems are a bunch of wusses. Look at the people.
That's for
Warren,
damn sure.
Elizabeth Warren, a complete communist socialist. Sanders, he should just stay in Vermont with his dogs. All right? Biden is probably the only hope if the Democrats win because he's business friendly. That's why you cannot beat Donald
Bearish.
Trump. Hey, somebody just mute their mic, please. Too much noise coming in. And you can't. And I'm just giving you a little politics here, even though I don't want to get into political stuff. Is you cannot beat an incumbent president with that much economic firepower. Because whatever he's doing for the business community is great, other than if he really screws up the China deal. In that case, see you later. Is because the rest of the opposition is a bunch of nothings. Find me one candidate who is business friendly, I mean really business friendly, and doesn't talk about taking down everybody and keep on raising taxes. Show me one candidate. Biden's the closest one that I can come because he's very Wall Street friendly. The rest of them, bunch of garbage, in my opinion. Show me one real strong candidate from the other side. That's what democracy is all about. I don't see any. And neither do you guys. So despite all the faults that President Trump has, you need a viable, like I always told my son, that if you don't like somebody in a competitive arena, but you don't have the balls or the strength to really beat them at their own game, then you deserve to lose. Think. All right, let's move on. Shopify, I like a lot. What other stock anyone wants to look at? Thank you for the answer, K-Bot, the best.
Hey Frank, can I get
Don't,
TTD? Oh, sorry.
of course. So we have TTD here. TTD is a very interesting situation here. TTD got taken down because there was a massive rotation, like we talked about last week on my last webinar on the software side, right? All of a sudden, the valuations came down. They took down everything, TTD, Splunk, like all these great companies. Personally speaking, I think TTD is a screaming buy because these guys are real. Now, does that not mean that the stock's going to be down forward like right after I say to buy it? Yes, it's possible. But let's do a couple of, let's construct this chart. And thank you for bringing TTD to my attention. Remember, these guys are the ones which power Google's whole programmatic trading. So, and we made money on it before, so I like it. So on a picture perfect world, the best time to buy TTD would be 174.19 because that's the retest of the upper end of the gap. That was the same thing as February 22nd, 2019. But things are never picture perfect. So I would say this is a good enough time somewhere here to buy it. That's a nice little hammer. I am seeing some volume. I did see money come into text later in the day as I posted out. I also saw money coming into other software names. One of my neighbors who's a big shot guy has a lot of, he's a big shot, he didn't work for Qualcomm, but he's a high-tech guy. And he said, hey, did you see Qualcomm was up too? I said, no, I didn't actually, because I haven't actually Qualcomm's in one of my screens, but we haven't been trading it lately. So let's go through TTD and we're going to finish this session because this is a very good example. Hillary has 150 jumpsuits just back from the dry cleaners. Okay, thanks for the Hillary jokes, Mike, but we'll leave it at that, okay? Hillary is from your part of the world too, Mike, okay? I'm not a Hillary supporter, but honestly, I know most of hardcore people hate everything to do with Clinton. She has 150 jumpsuits, so whether she has 150 pairs of shoes means nothing, because Melania Trump has 900 pairs of shoes, and I don't want to even get into it, okay? So, but no one talks about that, right? So I love you, Mike, but keep those pantsuit jokes aside. As you can tell, I am an equal opportunity ball buster. So, so here we go. I like this channel. I don't know if the stock's going to hit 175, but the point is that if we see a candle expansion above the 200-day moving average, that's a white line. Where is the white line here? That's at $200.32. Then we are going to basically hit 220. You want to trade this stock in stages. If you want a real confirmation on a technical breakout, you want to buy it over the 200. And over the 200, the stock's going to hit the upper end of the channel. 213 real fast. As you know, this stock jumps in increments of $10, $15 at a take. It could be up $20 for whatever reason. 221 is your 150-day moving average. I'm expecting the stock to go between 214 and 221. The first immediate target is 200.32. What did the stock close at today? The stock closed at today at, to give you an exact price, TTD closed at 195. So 195 to 200, it's $6 in your pocket. This is, in my opinion, a great opportunity. Let's look at the technicals. The 50-day moving average, by the way, is 240 bucks. Now, as I always say, when you deviate way off the beaten path, which is basically your highways, which is the 34 and the 50-day moving average, the standard deviation right now is almost -7. It means it has moved 7 standard deviations away from the moving averages. That is one heck of a capitulation. So if you can actually buy, in my opinion, you can buy, forget the trade war and everything, you can buy, unless something is really broken with the software market or the company, I don't think it is, as far as I know. You want to buy November calls. You can buy November calls cheap, 220s. And by the way, TTD calls aren't cheap, but still, or even at 230. At the 34-day moving average, you can buy calls at 230. You might want to do that. And just say, you know what? I'm going to swing this mofo all the way up here. So even if it slips and slides, you want to add to your cheap calls, build the positions, and let it go. But the most important factor is time to expiry. The strike price, you can buy it all the way 220, 230. Time to expiry. As long as you have time to dollar cost average. If you slip down 30%, 40%, and these things happen with these type of stocks, like literally, on a 10-minute basis. But I like it. So that's the trick. You want to buy time. October 18th and November's are good enough. You don't want to go out. I mean, I don't know if you want to go out January, but I have no idea what's going to happen in January or in December. I have a pretty good idea what's going to happen in October and November. And so if it slips and slides, you want to add more. Remember, when the market forces you to dollar cost average more, you increase your position size, which I'm going to call PS. It doesn't feel good at the time that you're dollar cost averaging. Okay? So I'm going to put DC as dollar cost averaging. So you bought something at 4, it's down to $1. You're buying more at $1. All of a sudden, the number of contracts, I'm going to call C, goes higher. So instead of owning 2 calls, now you own, let's say, 10. But your cost basis has gone down to maybe 2. As the stocks moves higher, this is the most simplest trick that has always worked for me. I would say majority of times have worked for me, as long as I'm following the charts. So you have now 10 contracts with an average cost of 2. As the stock turns around and rushes towards the 150, 34, and 50-day moving average, your calls go to 6. So instead of owning 2 calls at 4 and you sell at 6, which is 50%, now you own 10 calls. 10 calls from 2 that goes to 6. That means you made 200% on a much larger amount of calls. You are rich on that trade. Does everyone get that concept? You have to get that concept, because dollar cost averaging based on technical charts forces you to bring your cost basis down, increase your position size, C, or position size, number of calls, lowers your cost basis. So I'm going to call that CB, cost basis, right? Lowers your cost basis, increases the position size, and as the stock moves higher over a period of time, not years, maybe a couple of days, maybe a week or 2, you just make out like a bandit. I do that with these small lottos all the time. Now let's take a look at the technicals. I'm going to wrap this up. Love the volume today. 2.9 million. Nice. Liking this, not loving it, but who cares? When I least love it is when it works the most, right? The full stochastics need to curl up higher. It's kind of moving sideways, but that's your downtrend channel before it goes. When it starts to move here, you want to add more. Remember, this is the type of stock you want to add more, not just on the slippage down towards the 175 level or so, but also any candle expansion. You want to add more. Remember, adding more to a bullish candle expansion is equally powerful as dollar cost averaging lower. Just so you guys understand that. I've shown that many times. Chase it, especially when it's coming off these type of lows. Don't chase it when it's up here. Even though we thought it was going to go higher, market conditions changed, and then this happened. This is a great opportunity. Now, it might linger around like this, slip and slide a couple of dollars, but the minute you start to see this crossing over, buy it. You can see this on your own platform. Let's take a look at the McClellan oscillator. I'm liking it. This is good. There was a positive divergence. Stock went lower. McClellan oscillator was higher than where it was, which was minus 300 when the stock was here. So stock prices are higher. McClellan oscillator hit it, after this big drop one day, it hit a low. But even though the stock went way lower, the McClellan oscillator did not go that low. That is a positive divergence known as a PS. Number 3. This is something which shows that the underlying, this is also a positive divergence, by the way. The stochastics are doing some cliff diving out there in Bermuda like nobody's business. Look at that. minus 12. Oh, crap. But I see, in my technical eye, I see a falling wedge, kind of a falling wedge. Here is a positive divergence. The MACD histograms fail to follow the MACD stochastics all the way down, because the MACD histogram should be blood red all the way down here. Wouldn't you agree? Following the stows, but it didn't do that. So this went down into the deep dark abyss, and this is moving higher. I like it overall. On that note, guys, you guys are the best. Doing these sessions wakes me up a lot. And I will tell you, it is not an easy market, but the cheapo lottos and stuff, I'm very excited about it. Some serious positions on it. I tweak them. I take some money out, back and forth. But let's face facts. We can do all kinds of technical forecasts. We can do Hillary 150 pantsuits. I'm just busting your chop, Mike. And we can talk about Biden and his son. We can talk about Trump and the Ukrainian chat. We can talk about Trump and lots of other stuff. We never really know what the markets are going to do. Think about it for a minute, right? I'm generally bullish on the U.S. markets for a simple reason. I believe in U.S. business. I do. Most of you work in the business world, I think. Do you really believe in the U.S. business exceptionalism? I don't know. You know, maybe my life experiences have been different. I'm not a bear. Unless the Federal Reserve Bank, and it's the last thing I'll tell you guys, is the most important thing that you learn from the few dollars that you pay every month to stay with Clue Estate Trading, and thank you for that. Unless the Federal Reserve makes a complete U-turn and goes completely hawkish, in other words, they say enough is enough, we're raising rates, the markets are going to keep on going higher. That's all you need to know. I've been doing this for a while. I understand economics. I understand a lot of other stuff, just the way you guys understand a lot of other stuff. And some of you understand the market maybe better than I do. Some of you understand sports better than I do, gambling better than I do. But when it comes to the markets, I know what I'm talking about. So lots of opportunities. I wish I had the time and the manpower. If somebody wants to join me on my team, hey, DM me. We'll work something out, because I definitely need manpower, because there are so many great stocks moving on the same day. I can't put everything up. I do a lot of other trades on the side, which I don't even have time to put up. It's not physically possible for me. But if anyone wants to chime in and join the Clue Estate Trading team, reach out to me, man. We'll work out, man or woman. All right. Love you all. Have a great evening. God bless you. Mike, love you.